afternoon to you all. Clearly, the organizers kept the best session for the end. So you are here with us to talk about Africa and fintech and innovation in a continent that often the general misconception is that Africa is a homogeneous set of countries with similar characteristics, similar developments, similar rhythms. And that could not be farthest from the truth. Every country in Africa has a very different predisposition, a very, very different market, a very different reaction. And in fact, much of what we will be discussing today, some of it will apply to Africa as a continent, but most of it will apply to specific situations in specific countries. And that is useful because those may actually play and help you in your own countries to find those similar points in the development, similar areas of success and failure that you can learn from. With us, actually, we could call this panel the co-founder panel. All of these ladies and gentlemen are all entrepreneurs who launch themselves into creating value, into disrupting financial services in their countries, some of them in multiple countries. And the effort today in this panel is really to share some of that journey. The disruptions, the obstacles, how things worked, didn't work, case studies. So a broad range of subjects that I hope is of value to you. But before we go there, I'd like to give each one of them a few minutes to tell you their story, why they're here, how they got here, and why you should listen to them at all. With that, Viola, who are you?
Who am I? The only woman on the panel, number one, which is usually how I find myself. But it's a pleasure to be here, and my name is Viola Llewellyn. I'm the co-founder and president of Ovamba Solutions, Inc. And although it's a US-based company, myself of Cameroonian descent and my business partner, Marvin Cole, the Jamaican as I call him, decided that we would tackle the problem of access to capital in Africa. We launched our business in Cameroon in 2013. It's in the Francophone zone in Central Africa, and our sole aim is to help SMEs to grow. In pivoting and failing forward, we have found ourselves today as one of the leading SME fintech funders on the continent, next to some of my esteemed colleagues here as well. We're also the only Sharia-certified fintech platform which gives us access to the numerous unserved Muslims on the African continent. Today, you can characterize us as an asset-backed, off-balance sheet lender and an option for investors who wish to invest in emerging markets in Africa. But for our customers, we are their biggest opportunity at pure growth. And I think that's really all I can say at this point.
Thank you. Samir?
Good afternoon. I'm Samir, co-founder of Celcom in Tanzania, now branching off into Uganda and other countries in East Africa and then eventually beyond. Our main role in the financial sector in Tanzania is we've been called the glue or the gravy or the sauce that kind of holds everyone together. So we sit in the middle. We're in between the banks. We're in between the wallets in the market. We have a merchant network that services both of those sectors. We have the biggest biller portfolio in the market. And the secret to our success really has been that our business model has been purely based on revenue share. And the fact that there isn't a national switch in the country, we kind of have become the de facto national switch in the Tanzanian market, with ambitions to become the central switch. We're now regulated by the central bank directly because of the volume of transactions that we process. And again, I think one of the main things that really drives us is that a lot of people take East Africa for granted. They underestimate it. They don't see the potential or the opportunity, and that's always a good thing for us, and therefore that's kind of where we're headed.
Samir, I disagree with that. I think more and more people are seeing the potential, and more people want to be present and be part of it. And not only from a funding perspective, but also I can see that there are providers and startups from other regions coming to Africa. So that's the panel, right? We disagree with each other. That's what we're here to do. So thank you very much, Samir. Sean?
Good afternoon, everyone. My name is Sean Emery. I'm co-founder of Rainfin.com. We had this debate about at what stage do you move from founder to co-founder, and we had this interesting debate before we came here around it. But it seems like in this particular hall, there's so many co-founders around everything, which is a great thing to see in this fintech space. It shows you all entrepreneurship and innovation. Rainfin started with one core mission, and that was to bring as much capital as possible to the African continent to fund both consumers, SMEs, and corporates. In that context, Rainfin is a credit marketplace. We perceive ourselves at this stage to be a credit marketplace that facilitates flow of capital from large institutions, from retail customers, from high net worth individuals and private banks that wants to flow into Africa, that wants to flow into the SME market, or wants to flow particularly into the institutional market. We started out as a traditional context being a peer-to-peer lender, where it was effectively, that was the core of our infrastructure. We then migrated to become a credit marketplace where the credit was no longer peer-to-peer, but very much often institutional to that. And I agree with your statement very much. There's a large amount of institutions who want to start putting capital to use in Africa. They're trying to find the channels to do that. And by finding those channels where you can have multiple parties working together, multiple fintechs who can work together, we can see that flow, and we can see that financial inclusion coming to play.
And Sean, you are also an investor?
Yes. So I'm here specifically talking as the Rainfin side, but yes, I co-founded, excuse the word again. We founded a very small, started out being quite a small fintech investment company. The company is called TSS Capital. It has grown. We've made quite a few investments in fintech space in the African market. I'll talk about a few of those. A, to promote them, and B, they're good examples of how this can work.
I'm going to stop you now. So any co-founders in the audience? Raise your hand. Okay, good. We're not alone. Kudzai.
Well, again, saving the best for last. I'm the last to go. My name is...
Thank you. Next.
Good afternoon, everyone. My name is Kudzai Kutukwa, and I'm the co-founder, again, of Mobisurance. Mobisurance started with one core mission to try and understand and answer the question why there wasn't any credit. Sorry, I'm now getting caught up with the whole credit thing.
If you want, I can read your bio if you want.
Why there wasn't any form of microinsurance for small-scale farmers. Because we found the dynamic to be very interesting, that the people that actually need insurance cannot afford it, and the people that can afford it don't actually need it. So by trying to answer that question, we then went on to investigate the dynamics of the market, specifically with regards to crop insurance, and we found out a lot of things with regards to how the current business model was set, the problems that were also in that space, and we started then leveraging technology to then try and bring that democratization of that specific aspect of financial services to the people that really need it. So what we actually do now is that we use satellite imagery we created a mobile platform that uses satellite imagery to give access to crop insurance to small-scale farmers, and the hope is to do it profitably as well. So that's the current thing we're busy with. We've just completed our first pilot with about 700 farmers. Our database has now grown to over 2,000, and we hope to continue growing it in that regard.
But it wasn't easy sailing, right? Mobisurance, you started with it, then the exchange came in. That's an interesting story.
Right. Another interesting story that we're also talking about backstage is that during the time that we actually wanted to do the first pilot, Southern Africa was hit by a very severe drought, which was ironic, good and bad, in that good, it created the awareness that we needed to say, right, everybody needs insurance. But at the same time, it put us in a tough spot because we couldn't test our model. So we immediately had to pivot to something else, which is what we call the Emerging Farmers Exchange, where same farmer or same target group, and we're trying to give them access to market. So currently now, we're merging that with the insurance offering, and we're back to the original business model of insurance.
Rain makes fintechs flourish. That's good. That's good. That's
There you go,
good.
Rainfin, right? Good.
Okay, great. Thank you very much. Thank you very much. Maybe we launch a discussion with a state of play. So where are we in Africa? Not at the continent level, but in your specific areas of or geographic locations. Where are we? State of play. And to start with, I'm going to ask Viola again to go through it. And I know that you want the slide now, or? Yeah. Could we have the diagram up, please? So where are we? FinTech, Africa, Cameroon, your view, please.
We're at the beginning of an amazing explosion. Everybody talks about the leapfrog effect about Africa. We've heard this time and time again. But I really believe that depending on what area of the fintech pie you are chewing on, will give you the perspective that fits the solution you're trying to push the most. For us, where we are seeing an opportunity for inclusion. Anytime you have the ability to gather 1.1 billion human beings together and provide them with a service, you're not just talking about creating jobs, opportunities, taking advantage of the growing middle class, but you're also beginning to understand what we call the missing middle. And for us, the missing middle is that $2.7 trillion gap for the trade sector that drives as much of Africa's GDP, which some calculate is as much as 70% of what goes on the continent. Our business in particular looks at financial inclusion to the point that we've actually created African language chatbots, natural language, which we partner with Microsoft, in order to take advantage of the fact that not everybody speaks post-colonial languages. Africa's reached a point where it's getting brave enough to be able to self-determine itself, both creatively, financially, and by business. And I'm hoping that it will be the beginning of cross-border trade, collaboration, and the ability to export some of our own IP and some of those opportunities becoming global partnerships.
Thank you. Thank you very much. So it's a huge opportunity. Kutsai, how do you think fintechs are reacting to this? What's the latest from your vantage point?
Well, to that question, fintechs are reacting in a great way to that opportunity or to these opportunities that are rising, in that they're now coupling like what we did to try and introduce technology to try and address some of these gaps, because most of the infrastructure that existed prior to the whole fintech revolution could not be effectively and profitably used to serve people that were locked out or that were financially excluded. But we are seeing business models coming up and companies coming up with interesting business models that are able to then touch multiple groups of people at the same time by using mobile devices, mobile apps, and other forms of big data to just now, whether it's alternative credit scoring, whether it's lending, all that sort of thing. We're now seeing all of that coming up and then closing that gap and trying to now introduce a form of financial inclusion. Just in conclusion, from a South African perspective, we're seeing more of not necessarily disruption, but new companies coming up, being built on top of existing structures, but doing or introducing financial services at a more faster pace and at a more convenient pace than what could happen before.
And that is the fintechs, technologies enabling those business models, but also the customers are more receptive to those business models because of technology again, or how do you see that?
To give another example, for millennials, they prefer, when it comes to things like banking and all of that, they'll rather engage with a financial institution or financial service from a mobile device than actually walking into a bank branch and sitting with a bank manager.
Similar as everywhere in the planet.
Exactly.
Right? So there is absolutely no difference there.
Yes, in that respect, there isn't really much of a difference. So you see, even from the customer endpoint, there's a lot of areas that now fintech is actually helping customer engagement, also cutting down on distribution costs, which then makes the end product much cheaper for the customer.
Great, thank you. Sean, what's your view?
So Africa is a very, I mean, clearly each of these countries are very different, and we can talk through each of them have a slightly different pace in this market. Where you say, what's the state of play? There's a very different state of play in all of them. But if I talk a couple of the key lowest common denominators across all of them, is that they are very much mobile dominated, right? We've got mobile networks that are very dominant. That means it's put a mobile phone in the hands of very many people. It's often the very first time, clearly, they're getting exposure to the internet. Therefore, their first experience of banking or financial services is through that phone. Lots of the time, it's through their first purchase of airtime. It's through loading airtime credits. It's through either their first experience of credit is effectively getting a credit on an airtime advance. And they understand that they have this ability. And then in that context, mobile operators are exceptionally well positioned with the data, with the devices, with the services to be the way that fintechs can use to integrate. They're also one of the biggest barriers to the entry, but they also clearly are one of the biggest opening markets. But Africa is dominated as well by two very specific sectors, I suppose, as every emerging market is. We are going to have 75% of our population under the age of 25 by the year 2022, which means we are clearly a very, very emerging market, people very receptive to technology, but very young. We also technically are quite a poor continent when it comes to per GDP growth. So all of the financial services have to be able to deliver a micro service, a very cost-effective service in financial inclusion. So you have to deal with someone who wants $1 or $2, and therefore your whole infrastructure has to be built around fintech. So what you've had is you've had banks in the past in Africa that have serviced really only the wealthy and the corporates and the infrastructure. Some of them pulled out completely of SME and consumer lending a long, long time ago. In that context, you've got a deeply underserved market that can only be served by fintech, taking these various slices. In that logic, the fintech players that are entering that market, it's exceptionally difficult to get in, but once they get in, their services scale exponentially because the demand is almost unstoppable in that context.
Indeed, and that I think is a great picture. I was a couple of years ago, was part of a group of the Gates Foundation, the Enablers Group. We're looking to define a digital financial services platform by standardizing components that would be relevant to every emerging country. Interesting exercise. And there, one of the use cases, and I think I'm boring you with this because it's actually a very good example of what technology and mobile technology can enable. Think of this fisherman in Nigeria somewhere. And obviously, in the morning, wakes up, goes and gets actually a loan to buy fuel to go fish, then goes to the market, sells the fish, and goes and repays the loan. But of course, he can only go to one lender, the one in his village, because he doesn't have time to go to the next village. And actually, his family and himself, they don't have credit, social credit, more than in 2 or 3 villages around. But that's sufficient. Through a mobile platform, you actually... These fishermen can have access to the lenders in 3 towns or 3 villages. So now there is a market. Now he can play one against the other for price. And now you structure that, and 100,000 fishermen. Now the banks are interested because it's not a loan of $10. It's actually $10 times 100,000. Then those banks that weren't interested in this now suddenly are interested because there is a market. So I think that, to me, that woke me up to the reality of that mobile technology and how it actually influences everybody's lives. Now, a telco in the room. So the greatest disruptor in Africa, and I think in the briefing we talked about M-Pesa and so on. So you really are combining the best of both worlds. You are not only creating the delivery mechanism, but you're also getting yourselves into financial services. Samir.
Yeah, so I guess Africa, from where we sit in East Africa, is relatively different. All the attention always goes to Kenya as the poster child for financial services in East Africa. But Tanzania has overtaken Kenya both by value and volume since last year, effectively. So we process a lot more digital transactions than Kenya does. One of the things that kind of helps our market is that it's very well segmented. There isn't one clear front runner like Safaricom does in Kenya. So Vodacom, who is a subsidiary of Vodafone and therefore has the same brand in M-Pesa in Tanzania, has been trying to dominate the market like they do in the other country, the neighboring country. So what really helps us is the fact that with a very well segmented market, everyone has an equal share, and therefore everyone's trying to innovate and outpace the other. Where we sit in the middle, we enable all of them to reach the customer and to innovate and bring new services to the table. What's kind of hurting the market a little bit now is that the mobile operators are now losing revenue on the core services side of things, and therefore the revenues on the financial services side of things are strained to fill the gap. It's not helped because as with a higher tariff, you have higher taxation on that same charge, and therefore there's a bit of a tug of war between the tax authorities and the MNOs. What really helps there is that you get a lot of over-the-top applications who come in and use data or use USSD or use SMS as a channel to provide new services. Now, the downside to that, again, is that the charging model, because they're trying to make up for the losses on core services, they want to charge 4% or 5% on a normal collection account or a bill payment account, which is, again, a lot higher than what the schemes charge in other parts of the world. So it doesn't make sense. So yes, you're leapfrogging the schemes, but you're trying to exorbitantly charge a lot more. And the banks are now waking up. So ironically, the MNOs cannot offer mobile financial services without leveraging the strong bank branch networks where their agents go in and buy float.
So you have partnerships now with the banks?
So we have partnerships with all of them, except the fact that, again, those margins are now dropping as well. So a bank would have previously made 0.25% on a cash-in float transaction. Now it's down to 0.15%. Again, so now the banks are waking up and saying, okay, we need to do something on our own to combat this and win back our customers, because obviously it's drained a lot of liquidity out of the market and it's all sitting in trust accounts. So depending on which trust account, which bank the trust account sits at, that's the bank that's made the cheap deposits. So the banks are waking up, bringing in a lot more innovation, a lot more over-the-top applications in terms of low KYC bank accounts, which will hopefully take back the customer.
And in terms of passporting, we were discussing earlier. So you are seeing the same trouble that M-Pesa saw, transposing the model to other countries, very, very difficult. You're trying now to do so, that?
So the banks are trying it. We are still a facilitator in the market. We will still allow you to plug into us for a single turnkey solution, integration into everything that's financially relevant in one way or another. It could be an agent, could be the mobile channel, could be billers, could be interbank transfers. Any of those would still transmit through our switch. So we're still okay, but I think we will probably start feeling the pinch a little bit as they come under pressure and they want more out of our margin.
Okay.
Can I read the disruptor?
No, next. But of course.
I would like to take respectful disruption stance against Sean for a minute. Sean's picture of Africa is absolutely accurate as it relates to the needs and the fact that the exponential growth is truly there. But we're here today to explain to all of you that some of your ideas about Africa may be in need of a slight adjustment. So let me fill in some of the picture that might be considered as missing. We, in our business, deal with individuals who need $500,000. And fintech at $500,000 does exactly what Sean says. We don't want anybody in this room to run away thinking that Kiva, charity, and small $1 and $10, $100 is the only story about our dear continent. There is humongous opportunity to scale along the backbone of telcos. There is amazing opportunity to partner with guys like Rainfin when it comes to investment and bringing capital onto the continent. We ourselves are focused on the missing middle. That means that if you're a fintech in Africa and you've calibrated and understood the problem properly, and your solution is sticky enough with your customers, you're probably going to operate for quite a long time with no direct competitor. You need to be incredibly patient and smart to do well in Africa. But if you can get your ideas to make sense and you're willing to fail forward, then you will start to get some really interesting scale. So my disruption against Sean was the amounts that he mentioned, nothing other than that.
So I can have the content
We're in a fight
of
now.
addressing that. So I think that you're 100% correct. And I think this is clearly where I believe Africa, more so than perhaps any other region, needs 3 disruptions to work together. The first thing we need is clearly the physical transactional disruption and payments and services and scorecards. And that's what everybody talks about all the time with a mobile operator. I regard that as a given. That's just the rails we need to operate. And actually, for me, that's not actually financial disruption. That's just a better way to do a transaction. The second piece is Africa is in dire need of regulatory disruption. And I'll talk to you a little bit about where that comes to, because if you want to finance people and you want capital flows to come into a country, you desperately need not to tax that too highly when the person removes their capital after receiving interest and having bad debts and having losses. So the withholding tax situation is different from a regulatory point of view, exchange controls. But it's the last piece that is perhaps the most important to understand in Africa. And that is what we really call financial disruption of the actual chains. And let me talk to you about what I mean by that. We have to make finance cheaper. You cannot have, in essence, loans being provided at the rates that they have been to be disrupted. To disrupt that, you've got to make it less risky for people to participate. And how we see that in Rainfin's model is that we have the ability to work with people who have a different return matrix. So you can work with a development agency, or you can work with a corporate, or you can work with a bank, and you can put those 3 people together in a funding structure, where some of those development agencies might not require the 20% return premium for dealing in Africa. A corporate, for sure, he's happy to have no return so long as his farmers and his suppliers are funded because he's making enough margin. So by putting those people together in a funding structure, you can have an aggregated rate which is half the cost of what the banks are charging. Because the banks in Africa are short of capital. They're charging high premiums for their rates. So a financial restructuring is required, and the banks won't do that.
So building on that, with other promising developments that you've seen, clearly those partnerships. Anything else? And I'm not going to go through, I'm not going to ask you each one. Whoever wants to jump in, please do. Promising developments and who is behind them. Yeah, I think, Sean, you just gave us a good description of those developments that are triggered by some of the deficiencies, some of the challenges. Other promising developments?
There's an amazing group out in Senegal that has managed to persuade their central bank, the governing bank, to make the idea of a credit bureau possible, finally, in West Africa. We don't have that in Central Africa. I don't know if they have it in East. But the idea of being able to pull up somebody's credit score doesn't happen. Our company, Ovamba, is probably one of the few that uses ethnic and tribal data in its risk modeling. You'll notice I can't say credit because that's banking from where we are. So we have to deal with risk measurement as a way to address that. But what you said, Sean, is absolutely correct. Those 3 need to work together. But Volo out in Senegal has been developing a credit bureau information, blacklisting information, which is hard to find. So if you're the first to market, groovy as that may be, it's very difficult for you to be able to see in the dark, so to speak.
Yeah, I think one of the things, and this is back to my initial opening remarks about not enough interest, is because East Africa generally is perceived as Kenya. And when you work in Kenya, it's just M-Pesa or nothing. So if you have M-Pesa covered, you've got everything covered. When you move over to the other East African countries, you need to deal with all the different channels that are available. And therefore, you need to be very persistent and extremely, extremely patient to make sure that you get it done. And that's why a lot of people probably give up a bit too easily. But at the same time, I can't stress the first mover advantage enough in our part of the world. And if you persevere, you'll actually get you get extremely, extremely good results. And that's what it takes. But in terms of a credit bureau or anything that gives you a profile of a customer, I think the problem now is that the MNOs are now ring fencing and wall gardening that data for their own consumption. So you don't want to give it up and say, if Vodacom releases its data, someone at Tigo might be able to issue a loan based on a reverse lookup on a Vodacom customer's performance. So those kind of things are becoming extremely difficult to break down. From a central bank or a regulation point of view, we have an extremely good regulator in the central bank who has a watch and see approach. And therefore, I think, like Europe has the PSD2, I think we'll have something similar very soon, which is going to force these guys to release this data by force. Obviously, as far as we're concerned, even the registration data, the SIM registration data that is supposed to be your KYC, so they're not replicating KYC across all the different channels, is not centrally held. And therefore, your Tigo SIM will have its own registration record, and so will your Vodacom, and so will your Airtel, and so will your Zantel. So there's a lot of duplication where you can achieve better profiling. Even the data we have, whereby your TV subscription smart card number can be reverse looked up, so that we can tell you that you're a customer on network A, but you're also a customer on network B, and therefore you have a better profile with Bank M, for instance.
Just to add a bit of what we're talking about here, there's also a company in South Africa that's called Livestock Wealth. We're talking about it previously. So what they've done is they've come up with an Afrocentric way and approach to investing, where cattle are considered a very prized commodity in Africa, and they've managed to securitize them and make it into an investment that people can actually invest into. So the point of mentioning that is to actually say that what we're also seeing more of in Africa, or what we'll actually need more of, are those kind of business models or companies or fintechs that can tap into those cultural nuances that exist uniquely in each market. So that becomes more like, the technology becomes more like an accelerant, not just a cooler way of doing things or a techier way of doing things, but you're actually accelerating a pre-existing underlying behavior, which will lead to faster adoption of financial services and financial inclusion.
So you're saying cattle is just an asset class, like a real estate that you can invest on?
Exactly.
Yeah. Right. Okay.
They've managed to put it on a tech platform, so you can invest in a tenth of a cow or a full cow or an actual herd of cows, depending on your risk comfort level and your capital.
Okay, so we have questions from the audience. Let me just link one in, and then we continue. But one of the questions here is, which are the top few areas which are in need of fintech solutions? You're saying first mover advantage. Any areas? Obviously, somebody is willing to invest here. So what areas do you think are underserved and are in need for fintechs?
So let me give you an example of something that we completely accidentally, and this could be, you could draw parallels from it, or there are similar areas.
Before we say anything, 10% for the panel. Any ideas that come out of this discussion? 10% for the panel. Let's just, co-founders, please.
Okay, and I'll be a lot more elaborate and open. But so something that we completely accidentally stumbled across was savings groups. So these are groups of 10 to 20 people, very common African phenomenon where people put money into a pot where they meet once a week, and you can borrow from it, but then whatever you generate as interest or as fees, you then share out at the end of the cycle. So we accidentally were called into a meeting by the FSDT and the Aga Khan Foundation to digitize savings groups in southern Tanzania. And we developed a platform that actually literally digitized the entire cash handling process. You could contribute any time of the week. You could use any mobile wallet or go to any of our agents and contribute as many times as you like. But you still didn't take away from the fabric of the scheme, which means you still had to meet once a week. But what effectively happened was that we did a 10-group pilot. The pilot cycle ended about a month ago, and now every other group wants to be a part of this and to digitize it because, one, there's convenience. Two, the secretary, the treasurer, and the chair don't steal from the box, or rats don't chew on the money that you're storing away. But then the propensity to save was a lot bigger because every time a member contributed, everyone got a text message saying someone contributed $10, and therefore it became a competition of who could contribute more and more efficiently and effectively.
So we ask you for areas underserved, and you tell us your great story about your own success? You're saying that in other countries...
So this was not for profit. We did completely pro bono.
Okay.
But it was something that I had no idea what a savings group was until that. So now the idea now is to actually scale it into a national thing, whereby you're not pulling money out, but then you're actually putting it away in a bank account that generates a lot more interest that everyone can share.
I think another area that needs financial fintech solutions is actually the banks. When we first came into the market, we thought we were going to co-fund alongside microfinance institutions. And when we got there, simple questions such as, when last did you true up your accounts? Oh, the guy that does that is away on vacation for a month. Well, there is a spreadsheet somewhere, but at the end of the year, we reconcile all accounts. And this was prohibitive and frightening, to say the least. So we ended up having to make treasury software for microfinance institutions. And that was nearly 4 years ago. And since then, I can definitely say, banks can be enabled and disrupted at the same time. Ovamba does scale up by helping banks with technology solutions because they just refuse to change the way in which they underwrite risk for SMEs. And so therefore, they do what you've just described, and they go to these informal savings and loan groups. They either go by the name of Tontine, Jangi, Sacos, Partner, Box, Meeting. It's done all over the continent. It's been going on for hundreds and hundreds and hundreds of years. And those are actually who our competitors are. If people aren't coming to us, they're definitely not going to the bank, they're going to the Njangi groups. And just to add an underscore, in Cameroon, houses, there's no mortgages. You can get a tiny bit of a loan from a bank, but you will build your multi-story building cash because of what he's just described. You go to your group and you take out your money, you build a bit at a time, you look all over the city, it's all built with cash.
Okay, let's move to another question. Yes. Unique challenges. If I was a foreign fintech coming into Africa, what would be the challenge, the biggest challenge from your vantage point?
So I think from our point of view anyway, if I talk specifically about South Africa, because we've had a number of international fintech companies coming to South Africa, often because South Africa is deemed to have one of the better financial systems in Africa, given its maturity. In that context, local regulation and foreign exchange control represent a massive issue normally for companies when they come in. So we do have a regulatory and legal framework which is quite unusual, and a lot of adaptation needs to be done. And I think in that context, the adaptation is really around consumer protection. We have a lot of very good consumer protection rules in South Africa, and we have a very, very active national credit regulator that regulates credit. And I think for me, if I could talk about what are the problems, and you said what are the opportunities in the previous question for me, is that I deeply feel concerned that there is massive exploitation in Africa in finance. And I think that in that context for me, if you want to have an opportunity to come in, there's a really need for a great payments platform across continent effectively. I think the Bill and Melinda Gates Foundation are working on something which is quite great in that context, to work with the operators to allow, if you could build interoperability between mobile wallets, you could really save us quite significantly.
To that, a different aspect of it, thank you for that. Do you think being a non-African fintech, you have a tougher time than if you are an African fintech coming from one country to the next, or is it the same thing? Is the question clear?
Does someone else want to take it?
Yeah.
I think it's more or less the same. Even if you're like a local fintech trying to scale into another African country, because you're going to run into like regulation, like he pointed out. It's a universal problem that's not going to affect you more or less the same if you're from Europe or Africa or the like. And the other side to that question, or the other answer to that, would actually be that in order to actually offer fintech solutions or to bring fintech solutions into Africa, a company actually needs to understand the undertones or the culture first. I know that's general international business, but like what Viola was talking about and what Sean was talking about, these savings group, you might come in with the perception that banks are not lending and that there's a credit gap, which there is. But if you don't understand how financing is actually being done currently and how people are actually going around it, then it becomes a bit of a problem for you. And in addition, just to also tackle that question, the unique challenges that maybe foreign fintech might face would probably be around connectivity, where depending on where that foreign fintech is coming from, connectivity in some parts of the continent is not all that good. So especially if you're a mobile-based company and you're trying to introduce a variety of mobile services, you will run into some connectivity issues. Data prices are still very high. I'm glad we have a network operator on the panel. But that's also another issue to say data prices are also very high in some parts of Africa or even the continent in general. There isn't that much smartphone penetration, which limits the amount of services in terms of applications and all of that that you can build.
I think that's a very important point. Sorry, can I just jump in there for a second? Is that, I mean, one of the biggest aspects people forget is that Africa still has a large majority of feature phones. People were talking about the Philippines, which had 80% smartphones. That's not the case in Africa. In Africa, we have 80% feature phone.
Yeah, but you can still, I mean, amazingly, text and, I mean, there are many ways in which a feature phone can actually be used very effectively to not only affect payments and receive payments, but manage your accounts and everything else. But it doesn't allow you to go beyond that. That's the point.
I think often fintechs design their products, if I walk around here, for a smartphone.
Yeah.
They haven't thought about
That's fair.
designing them for a feature phone as an opportunity.
Most of Africa is Droid-based anyway.
Yes.
So I think that there's, I mean, there are, just to talk about it quickly, if there are any fintechs here, there are 3 great fintech hubs across Africa. I mean, effectively Kenya, there's a great hub. It's sponsored by the government, works really, really well. And it's a nice place to go. It's quite dominant. There's a lot of support infrastructure. Cape Town as well. There's Silicon Cape. There's a great fintech innovation environment. They're starting one in Nigeria. I don't know exactly how it's going on, but they're starting one there. So there are these.
There's 2.5.
There are these pockets where there is deep innovation skills, fintech hubs, where you can get lots of support.
Thank you. Let me move forward in the interest of time, and we really need to talk about regulation. Regulators, the role they play. In the rest of the world, regulators used to be the big obstacle that everybody talked about. More and more we see that they take initiative. Here, Singapore is a great example where the regulator is really taken the role of innovation as their own, right? And that happens everywhere else. Sandboxes, all sorts of things that allow people to live a bit in the fringes of regulation. What is the state of play in Africa from a regulatory perspective? Is that the big obstacle? Are we still in the big obstacle phase, or have we moved on?
Can I ask, is there anybody from the South African regulator here? So I can just tell you that it is very bad.
There's no regulator from anywhere.
So we have I don't mean bad. There are actually some here. We saw them here. They came around. But I could just talk about. We can perhaps talk about each country.
Just talk about your country, for example, South Africa. What is the state?
So South Africa is very tough. Our regulator is contemplating these things. They are starting to have the first sort of blockchain sessions, but it's definitely not a regulatory environment that is really conducive to innovation. I mean, that's a summary. It's quite hard, actually. And in that context, we've had some bank failures. So they're very, very strict. We've had a lot of customer exploitation in the financial sector, so we can understand why they are.
So innovation is not in the agenda?
Innovation is not on their agenda, from my point of view. I'm constantly going to ask them if they're not to fine me, but yes, in that context we go there. So I don't feel they are.
Kutsai would agree with that?
Just to add to what Sean says, regulation, it's more or less lagging behind innovation in that all the innovations come up and then the regulators wake up and then they're like, hold on, what's that all about? And then they put a stop to things or they throw wheels in the spanner or whatever the case may be. So it's a situation where I think right now they're starting to do what they call a conduct of financial institutions bill, where they're trying to start to implement things like sandboxes and all that other stuff. But it's happening at a very slow pace, given the amount of acceleration and agility that a fintech needs. That needs to.
Let me accelerate you a little bit. Samir, what do you think?
Our regulator is amazing, in the room or not. So a very clear example
You can
is...
see how your co-founder and everything, you know how to talk to a regulator.
No, but the good
An
thing
MNO,
is
yeah.
the good thing is the MNOs had carte blanche
It's true,
initially.
Tanzania is much more open.
Much more open. The banks now don't have to worry about KYC, agent KYC, customer KYC. They can open accounts on the fly. The regulator has tried to level the playing field as much as possible so that the banks can also participate. They've tried to break the MNOs down where there's a lot of cross-subsidization happening. You would have an airtime ad today and an M-Pesa ad tomorrow. That was a huge saving, and therefore they're being extremely, extremely accommodating. So Tanzania, from a regulatory point of view, a lot of international guys are getting licenses to participate. So it's one of those places that's open for business.
Clearly, Kenya, Tanzania, any other country that you think is more advanced in terms of regulator seeing themselves as a...
Rwanda.
Rwanda's great
Rwanda,
as
okay.
well.
Unfortunately, I'm from the Francophone zone where there is no African country that has survived French rule. Sorry to all the Frenchies in the room. This means that as far as regulation is concerned, it's about making sure that banks don't get to do too well, but stick to all the rules. And anything to do with innovation or incumbency is looked at with shock, horror, fear, and let's shut that down and take a look at it next year. So what we do to get around that is don't become a bank. Provide services to individuals using creative means. There is a central region known as the SMAC. It's got a central governing bank. West Africa has the same. And then out of all of that is a 17-country harmonized cluster called OHADA. The reason why I bring this up is because if you're not operating strictly within banking, but you have the opportunity to scale and be unified both on business law, some legal, and some currency and banking activity. But the regulator is really only there to make sure that banks and microfinances do what they say. They have not figured out tech yet.
Okay, let's, interest of time. Case studies. Case studies worth emulating. Great stories, lessons learned, something we can take home with.
So I've got one. It's a company called, and not part of the investment that we have, so it's fine. We can talk about it. So there's a company called Jumo, and so an interesting concept is they do 1 million loans a day across Africa. Those
1 million.
1 million loans a day. And actually it's climbing, so that number could have changed by now. In that context, these are obviously micro loans. They're done through network operators, but they've managed to build an environment that is cross-country, cross-jurisdiction, worked very well. And what that context is innovative partnership with an operator, innovative fintech company, working very closely with local banks, had a regulatory structure, and has the ability to work with companies that can bring them deep finance. So I think there's an example of where you can collaborate these things. You can have immense scale because there's such an immense demand across the country.
Thank you. Another one?
Another one, my favorite would be Ban Ki-moon, which has a project called Usizo. So essentially with Usizo, what you do is they're disrupting the whole non-governmental donor structure where using cryptocurrency, you can just fund electricity for a school direct without it going through a non-governmental organization or any government agency. All you need is a blockchain, the Bitcoin address of the school, and then bam, you transfer Bitcoin, you take care of the school's electricity or water bills for the month, quick, easy, that sort of thing.
QR codes, there's a question. In China, they're taking off. In India, they're taking off. Do you see any signs of that in any of the African countries?
So in Tanzania specifically, you have M-Pesa, who's doing their own pay with M-Pesa based on a QR code, and for the feature phone, it's based on a till number for every merchant. We have our own QR code product in the market, which is scaling, and as of next month, we're rebranding it to MasterPass so that we have a solid brand behind it and greater acceptance, but also interoperability with all the banks that we work with. So it gives you scale and gives you interoperability amongst the banks, the MNOs, and common merchants, so you're not replicating the entire effort. So it's growing tremendously well.
Very good. And last, in the last 7 seconds, the next 12 months in Africa, what do you think is going to happen? What will we read in the headlines of the newspapers about fintech in the next 12 months in Africa? Kudzai. That you will become a billionaire, maybe, or?
Probably that will be one of the next headlines. But I think what we'll see probably in the next 12 months is more and more fintech, especially companies coming up, especially in the credit space, as well as digital banking and all that sort of thing. Because from a South African perspective, there's a massive push happening along those lines, and insurance as well.
I think they want to wrap up, I think.
Yeah,
Do you
the one thing we're going to see is we're going to see a big partnership between telco and a Chinese e-commerce player or a Chinese technology player. It's coming. It has to
That
come.
would be us.
Yeah.
Yeah.